Fair to say you simply flooded the system with money?
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we, as a central bank, we have the ability to create money digitally. And we do that by buying treasury bills or bonds or other government guaranteed securities. And that actually increases the money supply. We also print actual currency, and we distribute that through the Federal Reserve banks.
So this is the Federal Reserve's last chance before the next major financial crisis. And in this video, I'm going to be sharing with you guys some key details for what's coming up, what to expect, how this affects the stock market, the cryptocurrency market, precious metals, among other key details that you need to know, which will directly affect your entire net worth. So watch this video all the way to the end. Comment 777 if you're feeling blessed. If you're feeling bullish, let's run it. All right, bull runners, welcome back to the channel. So if you hold Bitcoin, Ethereum, BNB, Solana, XRP, Cardano, Avalanche, Dogecoin, Chainlink, any other altcoin, you want to watch this video all the way to the end. Right now, we're looking at the federalreserve.gov official website of their historical print orders all the way back to 2010. And if Jerome Powell is saying that they could just come out and print whenever they want, both physically and digitally, then the dollar is doomed. Absolutely going to go down in value over time and completely go away. Charlie Munger, who died recently, said the safest assumption is that the dollar is going to zero, and he's a billionaire. So don't listen to me. It's not financial advice. This is just the facts, and this is just the news. And go consult your financial advisor and ask them to share this stuff with you. And if they won't, then that's up to you on who you choose to listen to. So looking at the Board of Governors of the Federal Reserve System on their official website right here, this is what they do. So they buy up the bad debt. And if you look back in February 2020, in March, when this really started ramping up, they were issuing QE, quantitative easing. And then they recently started tightening with them raising interest rates. But when rates are low, money's easy, loans are cheap, then the Federal Reserve buys up the bonds. They buy up the bad debt. Now, when did this start? This started back in 2008. And I believe it was George Bush, when the housing market crash happened, they needed to figure something out to bail out the markets. So like, oh yeah, let's just print a lot of money. And so let's add to the balance sheet. So the Federal Reserve really started adding to the balance sheet back here in September and October of 2008. And you saw the short-term temporary dip, kind of traded sideways for a while, but they kept adding to their balance sheet for years. And then in 2020, they just went absolute off the rails of the crazy train. So then when we look in the past year, or if we go over the past year, we saw the Fed had to start tightening. And because they started lowering the effective federal funds rate, not lowering it, raising the effective federal funds rate, tightening on their balance sheet, the crypto bear market kicked in. But we see right here when Silicon Valley Bank collapsed, and this is preluding to what's coming next, because you guys saw the bull run that took place from March of 2020 all the way until November of 2021. This was created a combination of Bitcoin's 4-year market cycle, just Bitcoin doing what it's always done, the market doing what it's always done, but it was also created by the Fed adding to their balance sheet. It was created by Donald Trump signing the CARES Act into law, over $2 trillion. And also, when we look at the macro market sentiment, people were more bullish on, precious metals. They're more bullish on crypto than ever before. They're more bullish on real estate, because smart investors understand that if the Fed is going to continue to debase the dollar and print more currency, there's no max supply, then investors have to purchase real estate, they have to purchase precious metals, they have to purchase, commodities, they have to purchase crypto in order to preserve their wealth. And so asset prices, for those people out there that argue and say asset prices are inflated, absolutely they are. They have to be inflated because the Fed is inflating the money supply. So smart investors like yourself are moving money over to the asset classes that are going to appreciate over time. And so when we look at the crypto market, that's exactly what's happening. Now, towards the end of this video, I'm going to be talking about the Wyckoff accumulation and what's happening and where we're going to go next. But let's continue and let's dig into the news here on what is about to happen next, because the Federal Reserve Board announced that the Bank Term Funding Program will cease making new loans as scheduled on March 11th. So they're going to be rug pulling the bank. And if you guys remember back here in March of 2023, that's when, Silicon Valley Bank collapsed and they started the bank term funding program to add to their balance sheet to bail out the banks. So they had to buy the bad debt that the banks were holding on to. So that's when we saw Bitcoin rally up from 20K to 30K. And now that they're going to be ending that, this is not good news for the banks.
I miscalculated on how aggressive how scared the U.S. government was running. And now they realize that Bitcoin's actually better for everyone. It keeps perfect records. The people who they all thought were criminals using Bitcoin, turns out they were all caught. So using dollars is probably better for a criminal. And I think that there's going to be a moment where there's a run on the banks the way after the Civil War there was a run on Confederate money, and there was a run on the Greek drachma and a run on the French franc when they became a part of the euro. So I actually think that there will be a moment in time when I can buy my food, clothing, and shelter all in Bitcoin, and people won't want dollars anymore.
And the real question will be, will the money across the globe going from bank to bank run on the XRP ledger, or will it be a combination of different companies in products and services? Because you guys know that if you have a computer, you might have a PC, or you might have a Mac, or you might have Alienware, or you might have another type of computer, but there's these dominating forces, these dominating companies, just like in the stock market. The big seven hold up the majority of the stock market. You got like Amazon, you got Google, you got Microsoft, you got Tesla, then you got a few others that are holding up the stock market. And so in the crypto space, there's going to be a few projects in a few companies that are going to hold up the majority of the market, because looking at the dollar's worth and the purchasing power over the past, 40, 50, 60, 70 years, President Roosevelt criminalized the possession of gold back in like 1930 to 1940. The Bretton Woods Agreement established the gold standard as with the US dollar as the world reserve currency, and the gold standard was abandoned and currencies are no longer linked to gold in 1971, and then you saw the dollar just plummet after that. So quantitative easing begins in response to the financial crisis in 2008. So QE is an experimental money program, guys. The dollar isn't even an experimental money program. It hasn't been around for much longer than 100 years. So when you think about it, the dollar is destined to go away completely because it was experimental, right? So experimental money programs never last. Now, arguably, crypto is an experimental money program. So for all we know, crypto may not last forever, but it's probably going to last maybe 100 years, right? Let's just say 100 years. So by the time crypto goes away and, we see Bitcoin make less and less gains every decade or so, even if Bitcoin goes to $1 million, well, then what would it take to get it to $10 million? It might take another 10, 20, 30 years. So people are thinking too short term here. They're thinking over like, what's Bitcoin going to do? What's XRP going to do tomorrow? That's how short term people are thinking, because social media companies, the reason why people think this way is very, very simple. Social media's messed with your mind. They've trained you to be ADD, having short attention spans, less than a goldfish, because they get together in these meetings and they design these products and these companies to addict you to them so they can make more money, because if it's free, you're the product. If it's free, you're the product, so these advertising companies can sell to you. So they have to keep you addicted to these platforms. And because it's mentally trained you, these social media platforms have mentally trained you to have a short attention span. Well, then when you start investing for the first time, your attention span can't withstand the dips for longer than a day, a week, or even a month. So people sell out at bottoms and then they buy tops and then they get screwed, and then they call, and they say investing is a scam, and that yet they're holding the dollar. And they're not holding more than $10,000 in their bank account, let alone you shouldn't hold more than $250,000. You should have at least enough to pay your bills, but no more than that because of the FDIC. Looking at the U.S. Bureau of Labor Statistics, you guys can see the CPI inflation calculator. $100,000 in January of 2022 has the same buying power as $109,000 in December of 2023. But all this means is you've lost $9,104 in spending power because of inflation. And so what the Fed is trying to do with their effective federal funds rate, and talking about the bank term funding program and how this is going to affect everything, tying this all together, is they're trying to fight this. They're trying to fight inflation. And they tried to do it. They got it down to 3%. And then, they've been holding the rates pretty steady for a little while, but then inflation started to come back up, dip back down. Now it's coming back up. It was 3.4% in December. So when January's numbers come out in February, if we go higher, then the Fed is going to have to keep rates higher for longer. The unemployment rate right here is being bragged about being so low, the lowest levels in a long time, right? 3.7% since lower than COVID. Now, what happens when the unemployment rate is spiked up? Well, the last time that it spiked up was 2020, that was during COVID, that crashed the markets. The time before then that it spiked up was 2008, 2009, that crashed the markets. The time before then was 2000, 2003, that crashed the markets. And so when unemployment goes up, the last 3 market crashes can be somewhat tied to this unemployment chart. So when we're low, where do we go after low? To high. Let's keep it simple. Let's dumb this down, okay? I'm not going to use advanced terminology here. When we're low, where do we go after being low? We go to high, right? High on the chart, high unemployment. We're at low unemployment. So when that happens, if the last 3 times it caused a market crash, or not that it caused it, it was congruent to the same time that it happened, because the economy is like multiple parts moving together all at the same time. And so it's tough to predict exactly what would cause a market crash. It's not just one thing, right? Because you have the unemployment rate, you got CPI, you got inflation, you got the Fed funds rate, and you have lots of other stuff too as well that we're going to get into towards the end of this video. But if all of these things, all these moving parts, one of them starts to go haywire, then it affects the rest of them as well too. And so with layoff announcements in 2024, PayPal cut 9% of its workforce. UPS cut 12,000 roles today. This was today, guys. Microsoft cut 1,900. Twitch cut 35% of its workforce. Unity Software cut 25%. Brex 20%. Discord, Wayfair, Riot Games, Duolingo, Rent on the Runway, eBay, BlackRock. Even BlackRock cut 3%. Citigroup cuts 20,000. Google cut 1,000. Amazon cut several hundred roles. In 2023, layoffs jumped 98% from 2022. So what will 2024 look like? This hasn't even factored into this yet, guys. This unemployment rate on Fred.St. Louis, the Fed's official website, it might be a little lagging right here. So once we see this update, it's going to be scary.
That's why I'm here. That's why I'm so excited about it going forward. So look, I love being an underdog. I will take all of that feedback and we'll shock the world.
Yeah, you think you're going to shock the world. How are you going to do that?
We've got an Innovation Day coming out on the 25th, and that's why I'm here.
So PayPal definitely did shock the world. They fired 9% of their staff, approximately 2,500 employees, and PayPal stock dropped. And so they definitely shocked everyone. That's why you want to underpromise and overdeliver. But what will shock the world is this right here. Elon Musk, co-founder of PayPal, well, he bought X.com back in like the 90s. And his original vision for that was to make it like an everything app, like what China has for WeChat. And now it's somewhat coming to fruition. X obtained money transmitter licenses in 18 states, as of January 30th. Later this year, you will be able to use X as a payment method. So, Crypto Barbie posted this saying, I'm sure Elon Musk will integrate crypto and also potentially XRP into this. Isn't it interesting how X, the logo, is very similar to Stellar Lumens and XRP? Could that just be a coincidence, or could there be a plan behind the scenes there? So this will definitely shock the world. Now, in terms of PayPal, I know PayPal came out with their stablecoin, and there was a lot of problems within the smart contract for that. And it was one of the worst stablecoins that they could have dropped. So PayPal's been going downhill ever since Elon Musk left. And even though Twitter's valuation has dropped, Twitter's been actually getting better and better and better, with the engagement with the community, with Elon Musk and all that stuff. So I think it's going to be awesome to see what happens moving forward in the future for that and how that integrates with the blockchain. So looking at the CME Fed Watch tool here, 17 hours, 56 minutes until the next meeting, and 98.4% are expecting the Fed to keep the rates steady. And so not rising, not lowering, just holding the line. As you can see over the past year, the Fed has been holding the line right here since August of 2023. Now, in previous videos, I talked about what happens when they lower the effective federal funds rate and how that is in response to an economic crisis. Now, what would the charts be looking like? Because if we draw the Fibonacci retracement tool from October 2007 to the low of March of 2009, a full extension for the Dow Jones Industrial Average would be all the way up here to like 40,000, almost 200, 100 something right here. So if we pull a full extension for the stock market, could this be the end of the top of the stock market before we see some deeper, crazy correction going into 2030, and for this to be the last time to see gains in the stock market? Because average everyday retail investors that are buying into the stock market right now, this is one of the worst times to be able to do it. I wouldn't touch the stock market with a 100-foot pole right now, because eventually we're going to be coming down. And also to show you data on why I think the stock market will be coming down. Now, it's not going to happen tomorrow, okay? Although it might, but eventually it will, within our lifetime for sure. And within the next few years, it's more than likely. Here's what I am doing, okay? And this is what I've been preparing for the past few months. When we look at the Dow to gold ratio, the 100-year historical chart, this chart tracks the ratio of the Dow Jones Industrial Average to the price of gold. The number tells you how many ounces of gold it would take to buy the Dow at any given moment. Previous cycle lows have been 1.9 ounces in February of 1933, like all the way back here, and 1.29 ounces in January of 1980. So if we look all the way back here in 1980, this ratio was all the way down to 1.4, but looking back to 1999, it was all the way at 42. So let's look at the chart for gold. Let's also look at the stock market chart, and let's see if this is accurate, because if we were all the way up here of 41 on this ratio in June of 1999, where were we in the stock market? We were all the way up here at about 11,000 something, June of 1999. Yeah, the top of the Dow Jones Industrial Average. And sure, we kind of stayed up here for an extended period of time, but eventually we saw that crash leading into 2003. And then we rallied up for 2008 a little bit higher. And then we saw another crazy crash down. And then George Bush, right, QE, the Fed starts adding to the balance sheet. And when the Fed's adding to the balance sheet, that caused the stock market to rally. So the stock was just manipulated because the Fed was buying up bad debt. And then what were they doing? Well, the elite at the top, right, were making money in the stock market. And so you guys could see their portfolios, and there would be periods of time that would pop out there where they were selling these peaks right before the market crashes, because they had insider information, because they're the politicians and the people at the top, they have that insider information. And so they would sell the top and they would dump on retail. And so it's no different than in the crypto market. We're just unveiling this stuff and we're exposing this stuff for you guys and giving you the blueprint to help you make millions, so you can become the first millionaire in your family tree, create generational wealth, do all that good stuff. And so what's happening here? Where are we right now? And what's going to happen next? Because we can look in the past and see, okay, well, if we're upwards of 40, it means it was a bad time to be in the stock market. And in 1999, when was it a good time to get into gold? Well, right around 1999, where were we? We were all the way down here at like $200 an ounce. And then gold absolutely skyrocketed after that and went upwards of, $900 an ounce. Now we're over $2,000 an ounce. And so it was better to be getting out of the stock market and to be getting into gold at that time. Now, we are at about 18, we're at like 18.27 right now. So how you trade this chart is, if you're a macro trader and you're looking at moving your money around for the next 5, 10, 15, 20 years, maybe even longer than that, anything above 15 is bearish for the stock market, bullish for gold and precious metals. Anything below 5 is bullish for the stock market, bearish for gold and precious metals, and you want to be getting out of the precious metals market. And so right now we're at about 18. So it's not the best entry point for gold, because gold's about at its all-time high, but it's a lot better than being below 5 if gold is surging. So it's a good time, because when this drops and this comes back down and goes below 5, then gold is going to most likely be over $3,000 to $5,000 per ounce. Now, here's one thing that's interesting. On November 18th of 2004, State Street Cooperation launched SPDR Gold shares, which surpassed $1 billion in assets within the first 3 trading days. As of 2019, it was the largest gold-backed ETF in the world, and it had more than $40 billion in assets and $1.7 billion in day trading volume. Doesn't this sound very similar to the Bitcoin ETF? Gold ETF was approved. 18 days later, gold rallied up to $450 something and then crashed 10%, consolidated sideways for 287 days, which was 9.57 months, and then broke out from there. So the ETF for gold was good news, but it was already mostly priced in, because from May of 2004, look at this. People were buying the rumors for 189 days. Gold was up almost 20. And then once it finally gets approved, gold only rallies another 2-3%. So the ETF news was good news, but it was good to be buying beforehand. So with Bitcoin, the ETF news was proven to be good for Bitcoin, but only for those who are buying beforehand, because the U.S. Securities and Exchange Commission on their official website released this statement on the approval of spot Bitcoin exchange traded products right here, January 10th. Interesting enough how the market topped out one day later right here with this massive wick to the upside at about $49,000, and the market reversed. We also broke this upward trending support right here, and now we're back testing it as resistance. Now I want to explain what this means and what's most likely going to happen next. And could it be like what happened to gold, where we saw a sell-off just a few days, 18 days after the ETF approval, consolidate sideways for 287 days, and then we go into a bull market rally? Or could it be worse than that or better than that? Or are we just going to continue to, trade bullish and pass all-time highs right now? Watch this. Check this out. So I thought this was awesome. Malipo Crypto posted this about divergences. What is a divergence? Because it's very simple. A divergence occurs when a price prints a different structure than the indicator you're looking at. For example, Bitcoin could be doing, a higher high, whereas the RSI is doing a lower high. And the Ethereum could be doing a lower low, the RSI is doing a higher low. So the trend and structure diverges from each other. So it's pretty simple to understand because there's different types of divergences. There's bullish divergence, there's bearish divergences, and then there's hidden that we're not going to discuss in this video, but I want to show you on the chart what this looks like, because this is an emergency for the altcoin market. It's a make or break moment for Total 3, which is the entire altcoin market excluding Bitcoin and Ethereum. So every single altcoin that you hold could be in danger because we need to see a rally past the high of January 2nd. Otherwise, we're more than likely going to come back down to backtest $400 billion as support before continuing the bull market. So with the bearish divergence on the RSI, it's looking more likely that we come down in the short term for one final shakeout event before massive liquidity enters the market. So the real key here is to remain emotionally indifferent and prepare to back up the truck if this happens. And so if we look on the chart right here, you guys can see that we are making lower highs on the RSI where we are making higher highs on the price chart. And also we see this descending resistance on the RSI. So if the price pushes up and the market cap pushes up a little bit higher, we could see a rejection from here to come back down closer to 30 into oversold territory, which no financial advice, don't buy, don't sell anything we're talking about, which could be a great time to back up the truck for crypto, because after that, there's no going back, guys, because then the Federal Reserve is just going to keep printing more money and they're going to step in to bail out any banks that see a bank run, right? As you guys know, if we go to Bitcoin's price chart right here, well, the bank run that took place for Silicon Valley when the Fed had to step in and add to their balance sheet. So for example, if I pull up the Federal Reserve balance sheet right here next to Bitcoin, you can look on March 8th, right here, March 8th of 2023. Right after March 8th, the Fed started adding billions of dollars to their balance sheet. Now, where were we on March 8th of 2023? We were around right here. So the initial bank crash actually caused a drop in Bitcoin for a few days right here. And so if March 8th was right here, we saw it was about 10% to the downside. But when the Fed stepped in and they did this, they added upwards of 8,733,787. What is this in like billions of dollars? So I don't know exactly how much money that is, but it's a lot of money that they added. What happened to Bitcoin? Bitcoin did this, boom, it popped on out of here. And so could we see something like that happen towards the middle of this year where Bitcoin gets rejected from where we are right now? We see a trade-off to the downside, and then the Fed steps in, has to add to their balance sheet to stop these bank runs from taking place. They have to buy up the bad debt. If we look right here, the Fed can't keep tightening forever. If we click on all, you can see the Fed's been tightening since all the way back in April of 2022. So if the Fed keeps tightening, eventually when you tighten, something has to break. Like if I were to take this and I keep having something squeeze on this, eventually it's going to break, and then the Fed steps in to try and fix their own problem. And the only thing that they know how to do is print money. That's the only thing they know how to do, print money and adjust the interest rates. And so if they start lowering rates and then that causes in response to the bank runs, they would lower rates in response to the crash, initially we'd have some sort of shakeout event in crypto. We'd have a shakeout event in the stock market as well too. You know, the S&P 500, the Dow would come crashing down. Crypto could come crashing down temporarily to back test, you know, previous ranges as support, which would be this resistance zone back here at about $30,000 to $33,000 as support. That was resistance for 200 plus days since April of 2023 until October 2023, you know, almost, I think it was about 200 days, right around there. And then the Fed comes in, they print money, they step in, they bail out the banks, and we come on out of here towards the tail end of 2024. That's what I'm preparing for, and that's what I'm getting ready for. If we're looking at the crypto total market cap, Bitcoin, Ethereum, and all altcoins, we can see the Wyckoff accumulation. We're all the way back here during the bear market. This was phase A of the market. This was phase B of the market. This was phase C of the market. We're currently in phase D right now. Now during phase D, it's volatile. As you guys can see, you know, the price gets pretty choppy through this. And then we can see zones of support all the way back down here at about $1.16 trillion up to $1.26 trillion. We're at 1.6 right now. So if we were to see a final shakeout event down to this level, I would expect us to work our way out of here towards the tail end of 2024, but we might not dip that low. We might just kind of hang around here for a little bit, maybe see one little wick to the downside, but eventually I would expect us to break out towards the tail end of 2024. It's playing out almost exactly like the Wyckoff accumulation usually goes. And so when we see the breakout, this markup period, where we just hang out here for a little bit right up here on the screen before we continue to the upside to retest the all-time high. Because the reason why we would do that is because if the Fed breaks something, which they most likely will, their only option is to print money. And when the Fed prints money, smart investors take the money and they put it into productive asset classes. They take their money because they realize, oh shoot, the Fed just added X amount of dollars into circulation. The Fed just did that. So what's that going to do to the money that I'm holding? It's going to devalue it. So would it make more sense? Imagine you're a multi-billionaire. You don't just have $1,000, you have billions of dollars. Would it make sense for me to keep my money in the dollar that the Fed is devaluing right now? Or would it make sense for me to move it in one of the hottest emerging markets that BlackRock, Fidelity, ARK, all these other massive institutions that have trillions of dollars of assets under management are bullish on? Would it make sense for me to move it into that industry? Or would it make sense for me to keep it in cash? It's common sense at this point. So you know what we're doing, guys. We're backing up our truck all the way to the bank. Long term, we're grabbing the bags. We're packing them, stacking them, leaving no bags left behind because we believe the spending power of the dollar is going to keep going down in value. That's a fact based on inflation, blockchain tech, distributed ledger technology, cryptocurrencies are growing up in interest. That's the truth. And together, you know where we're going. We're going camping on the beaches of the moon. I will see you guys on the next video. If you want to discover our top altcoin picks first that we're the most bullish on when the markets really start ripping at the tail end of 2024, then go to bullrunners.com, click the button on the page, put in your best email address. You'll be instantly subscribed to our daily newsletter for free. You'll get access to our Telegram group, and you'll be notified first when we launch our financial education platform. You don't need any previous crypto trading experience. All you do is go to bullrunners.com and put in your best information. So I'll see you guys on the next video. I'll see you on bullrunners.com. As always, you know what to do. Stay bullish.